In 1991, Argentina made a promise: 1 peso, $1, by law, not a policy recommendation, not a central bank target, a constitutional guarantee, written into the convertibility law of April 1st, 1991, signed by President Carlos Menem and his economy minister, a man named Domingo Cavallo. For 10 years, that promise held. And on the back of that promise, an entire generation built something they had never had before: savings, dollar savings, in local banks, in Buenos Aires, in Cordoba, in Mendoza, school teachers, shopkeepers, mid-level managers, people who had watched their parents lose everything to inflation in the 1980s, when annual price increases hit 3,000%. They opened accounts. They deposited. They believed. By the autumn of 2001, those accounts held $80 billion. On Sunday, December 1st, 2001, a day Minister Cavallo chose deliberately because markets were closed and panic could wait until morning, he signed Decree 1570. By the time the banks opened on Monday, 36 million accounts were frozen. The weekly withdrawal limit, 250 pesos. The promise was over. But to understand why December 1st was not a sudden collapse, it was the last move in a very long game. You have to go back to the beginning. The convertibility law worked. That is the important thing to understand. For most of the 1990s, it genuinely worked. Before 1991, Argentina had been through cycles of hyperinflation so severe they had acquired a name: the inflationary spiral. In 1989, annual inflation reached 3,079%. Salaries lost their value before workers could spend them. Prices changed inside stores between morning and afternoon. People learned to buy things immediately. Anything physical, anything that would hold value. Because a peso in hand today was worth more than a peso in hand tomorrow. Cavallo's fix was elegant in its brutality. Eliminate the problem by eliminating the variable. Peg the peso to the dollar 1-to-1. Back every peso in circulation with a dollar in reserves. Restructure the central bank so it could not print money without matching foreign currency to cover it. The inflation stopped almost immediately. Between 1991 and 1998, Argentina's GDP grew at an average of 6% per year. The International Monetary Fund called it a model. Economists wrote papers. The Wall Street Journal ran editorials. Argentina was the proof of concept for currency board arrangements worldwide. And the savings poured in. The middle class, newly stable, newly confident, opened dollar-denominated accounts in local banks. Not money under the mattress. Not physical greenbacks. Legal, insured, institutional savings. The kind of savings a functioning country produces. By 2001, $80 billion sat in Argentine bank accounts. That number matters. Hold it in your mind. The first cracks appeared in 1999. Brazil devalued its currency. Argentine exports became expensive overnight. The economy began to contract. The government of President Fernando de la Rúa, elected in 1999 on promises of fiscal reform, found itself in an impossible position. The peg required discipline, but discipline required cutting spending. And cutting spending inside a recession destroys the tax base that funds the government you're trying to discipline. Argentina's debt burden, already substantial, became unpayable. In November 2001, the International Monetary Fund reviewed Argentina's request for an emergency disbursement of $1.2 billion and declined. And in November 2001, Argentines began doing something quiet, rational, and fatal: withdrawing their savings. Not all at once, not in panic, steadily, methodically, the way people who have lived through instability know how to move, quietly and in advance. $10 billion left the Argentine banking system in November alone. $2 billion per week. That is 12.5% of the entire deposit base, gone in 30 days. Cavallo was watching the same numbers. He had one tool left: the freeze. Stop the physical outflow, preserve electronic circulation, buy time. The banks would survive on paper. Convertibility would hold on paper. And in 90 days, perhaps, the IMF would reconsider. He picked Sunday. He signed the decree. He called it a restriction on financial operations. He did not call it a Corralito. That word came from a journalist. On December 3, 2001, 2 days after the decree, a television and radio commentator named Antonio Laje used it on air. El Corralito, the little pen, the small enclosure, the place where you put something to keep it from leaving. The word spread faster than any government communique. By the end of the week, every Argentine used it. Cavallo's ministry never officially adopted the term. It didn't matter. Language had claimed the thing before the state could name it. The mechanics of the decree were specific. You could transfer money between accounts. Yes. You could make electronic payments. Yes. Debit cards worked. Yes. What you could not do was touch physical currency beyond 250 pesos per week. The logic: banks don't lose reserves when money moves electronically. They only bleed reserves when money walks out the door as cash. Decreto 1570 was designed to last 90 days. It lasted 19 months. In that time, Argentina went through 5 presidents. The queues started Monday morning, and they did not stop. This is where the story becomes something other than economics. This is where it becomes something you can see. Families standing outside ATMs before sunrise. Office workers in suits waiting in lines that wrapped around city blocks. The machines dispensing their daily maximum, 50 pesos, the equivalent of $50, an amount that still meant $50 to everyone standing in that line, even though almost no one said it out loud anymore. The paradox was precise and maddening. The money existed. The accounts were real. The numbers on the screen were accurate. But they could not be touched. Argentines immediately began searching for every available exit. If you couldn't withdraw cash, you could spend electronically. And if you spent electronically on something physical, something you could hold or trade or resell, you had effectively converted a digital balance into a real asset. The electronics chains, Fravaga, Garbarino, reported sales increases of 200 to 300% in the first days after the freeze. Refrigerators, washing machines, air conditioners, televisions, people buying things they didn't need because the thing was real and the account balance was suddenly not. But this created its own contradiction. The stores receiving those digital payments were accumulating pesos in accounts they also couldn't access. Small shopkeepers couldn't meet payroll. Restaurants couldn't buy supplies from distributors who wanted cash. Signs went up in windows across Buenos Aires. Solo efectivo. Only cash. The informal economy, already significant in Argentina, became the only economy that functioned without friction. And the most financially sophisticated Argentines, those with the right contacts and the right knowledge, found one more channel: prepaid fuel cards from major petrol stations, sold in large denominations. One of the few instruments that could be purchased electronically and later redeemed for something with cash equivalent value. In the first week of December, certain filling stations reported selling months of inventory in days. The system was fracturing at every seam. Before we get into how 4 banks fell in 7 days, and why wire transfers were quietly emptying reserves even with the freeze in place, you need to understand what was happening inside the banks at exactly the same moment. Here is what Decreto 1570 could not stop: international wire transfers. The Corralito froze cash withdrawals. It did not freeze electronic transfers to foreign accounts. and for those with the means and the access, the exit was still open. Narrower than before, but open. And the people who knew about it were moving fast. In the first week of December 2001, an estimated $1 billion left Argentina through wire transfers alone. The banks were hemorrhaging reserves through a channel the decree hadn't sealed. The central bank watched its foreign currency holdings continue to fall. It could not print dollars to replace them. That was the entire architecture of the convertibility arrangement. The central bank could only issue pesos backed by dollars it physically held, and the dollars were leaving. On December 9th, an IMF delegation flew into Buenos Aires. They met with officials. They reviewed the figures. They flew back out without signing anything. The banks, already constrained by the government freeze, began imposing their own additional restrictions on top of the official ones. Loan approvals stopped. Internal transfers slowed. 4 smaller banks suspended operations entirely in the first 2 weeks of December. Not officially nationalized, not officially failed, simply stopped. On December 15th, President Fernando de la Rúa appeared on national television. He spoke for 40 minutes. In several neighborhoods of Buenos Aires, residents switched off their televisions. Not in anger, not in organized protest, quietly, deliberately, the way people disengage from something they have already decided they no longer believe. By that evening, the central bank's international reserves had fallen below $15 billion. The mathematical relationship between pesos in circulation and dollars in reserve, the relationship the convertibility law mandated that the Constitution had guaranteed, no longer held. Not technically, not by any honest accounting. Convertibility existed only as a legal statement. The substance behind it had been withdrawing, quietly, for months. December 19th, 10 o'clock in the evening. Fernando de la Rúa went on television again, this time to announce something different. Estado de sitio, a state of siege, emergency powers, restrictions on public gatherings, the language of governments that have run out of economic arguments and are reaching for security ones instead. 45 minutes after the broadcast ended, the first people appeared in the streets of Buenos Aires. Not with weapons, not with organized leadership, with pots and pans, banging them together as they walked. The cacerolazo, an Argentine tradition going back decades, now given new urgency by 3 weeks of frozen savings and a president who had just told citizens that gathering in public was forbidden. By midnight, the obelisco, the central monument at the intersection of Corrientes and Avenida 9 de Julio, was surrounded. December 20th brought something the freeze had not. It brought deaths. In clashes between security forces and protesters across Buenos Aires and other cities, 39 people were killed. The exact circumstances of individual incidents remain disputed in some cases. The number does not. At 1 o'clock in the afternoon of December 20th, Fernando de la Rúa submitted his written resignation. At 4:15 in the afternoon, a helicopter lifted from the roof of the Casa Rosada, the Pink House, the Argentine presidential palace, and carried him away over the city. It was the first time in Argentine history that a sitting president had left the palace by air under popular pressure. The country would have 4 more presidents in the following 12 days. 1 lasted 7 days. 1 lasted 1. December 23, 2001. Argentina declared sovereign default on approximately $100 billion of external debt. At the time, it was the largest sovereign default in the recorded history of the world. In January 2002, the new government, eventually stabilized under Eduardo Duhalde, did what everyone in Buenos Aires had understood was coming, and no one wanted to say aloud. They ended the convertibility. 1 peso was no longer $1. What followed was called pacificación, the forced conversion of dollar-denominated accounts into pesos. The official exchange rate was 1.4 pesos per dollar. For every dollar you had saved, you received 1 peso 40. By March 2002, the open market rate was 3 pesos 70 to the dollar. Do the arithmetic slowly. A person who had saved $10,000 in an Argentine bank, a teacher, a civil servant, an accountant who had spent 10 years building a cushion against the next crisis, received 14,000 pesos in January 2002. In March 2002, those 14,000 pesos bought $3,800. 62% gone. In 3 months. Not through inflation that eroded value gradually, giving families time to adapt. Through a legal instrument applied overnight, against which there was no market recourse and no appeals process that functioned in time to matter. The Argentine courts ruled pacification unconstitutional in 2002. Multiple chambers, multiple decisions. The government did not comply. Enforcement of constitutional rulings against the executive branch requires a state willing and able to enforce them. Argentina in 2002 was not that state. Legal cases from depositors whose savings were converted without consent continued for 15 years. Some remain unresolved to this day. Argentina today holds somewhere between $200 and $400 billion in physical U.S. currency. The range is wide because no one can audit what people keep behind ceiling tiles and under floorboards. What the Federal Reserve and independent economists agree on is this. Argentina is the second largest holder of physical U.S. dollars in the world, after Europe considered as a unified region. Per capita, Argentina holds more $100 bills than Russia, more than Iran, more than any country whose savings history did not run through December 2001. This did not happen by accident. It happened because a generation learned something precise about the difference between a number on a screen and a piece of paper in your hand, and then they taught their children the same lesson. The savings that disappeared in pacification were not kept in mattresses. They were in institutions, in regulated banks, in accounts that carried legal guarantees, and they vanished anyway. The Argentine middle class that rebuilt after 2002 did not rebuild the same way. New savings went into physical dollars, kept at home, into property purchased outright in cash, no mortgage, into anything that could not be frozen by a ministerial decree signed on a Sunday evening when the markets were closed. Every December 19th, protests mark the anniversary of the Corralito. Not large protests, not dramatic ones, more like a recurring notation, the kind a society makes when it has decided not to forget something important about its own recent history. The Corralito lasted 19 months. Its consequences have lasted a generation. Domingo Cavallo, the minister who signed the decree, who chose the Sunday, who believed that 90 days of restriction could save a convertibility arrangement the markets had already decided to abandon, has given interviews and written analyses in the years since. He argues that the problem was not the Corralito, but what came after. That if the peg had been maintained, if the IMF had provided the tranche, if the political situation had stabilized, things might have resolved differently. Perhaps. History does not run controlled experiments. What it does leave behind is evidence, and the evidence is 36 million accounts, 250 pesos per week, 14,000 pesos that became $3,800, a country that, 25 years later, keeps its savings in cash inside its walls. When you picture your savings, the number in the app, the balance on the screen, what are you actually picturing? A number, a guarantee, a promise that the institution holding your money will return it when you ask. Argentina in 2001 had the same numbers, the same guarantees, the same promise, written into law, written into the Constitution, backed by a decade of stability that had genuinely changed how people lived. The accounts were real. The money was real. Until the morning, it wasn't. That question is worth sitting with, not as a warning, not as a prediction, but as a fact about what savings actually are and what they depend on, that most stable economies have managed not to confront directly. Argentina confronted it on December 1st, 2001. It has been living with the answer ever since. If this kind of history is useful to you, specific moments when the numbers stopped meaning what they said, there's more on this channel. The stories are always in the details.